Alright team, what's up? Now let's talk about how to make these awesome fat ass trades, okay, that will flip our accounts, okay? So what we are going to talk about now is scaling in and scaling out, of course. So first of all, let me add the 1 minute chart as well. So let me explain to you what I did just around 1 hour ago or 1.5 hours ago. Okay. Um. So tonight, gold was pushing like crazy to 1865. Okay, and then it came down, and I marked up this level because it was a resistance around the 1847, 1847. Around in this area where I marked up a resistance level, and then when price was rejecting that level, I was checking the 1 minute time frame. Okay, I was checking the 1 minute time frame to see what the structure is doing. Okay, so as we can see, price was coming down, like on the 1 minute chart, price was coming down, then the structure got broken. Then I see a clear rejection of that level again with this huge wick over here. And then price starts making this bullish structure. And then I thought, okay, let's step into the game around in this area when the price clearly break through. Okay, my stop was below this wick. And when I saw that the price just keeps going and keeps going, I was moving my stop with the structure. Okay, and I will show you now exactly how I did this and how I have tried to load that shit up. At the end, I got stopped out with a big loaded up position with just a small profit. But the potential, if this thing would have blasted through the roof, is insane, guys. Is just insane. Okay. Yeah. Let's not talk about. Let me show you what I did. So, um, as you can see, now I already had few positions running. I was already scaling in. So like I told you, I saw this structure break. I saw the structure break, and then I was getting in around this area. A little bit later than I told you now. It was not around at this breakout. I had a position over here, but then it came down again, and I was just closing it because I thought that this is just a compression zone and market want to drop again. Didn't hold it, was not patient because it was before the session. I was like, okay, just give it a try, like a quick shot with just 0.25% risk or something like that. Nothing special, nothing special. But when I saw that it really starts moving, I was like, all right, fuck it, man. I closed this one around here with a 10 grand loss, and then I was like, all right, this thing wants to blast through the roof, and then I was getting in. Okay, I was getting in, holding this thing with a stop loss around, I don't know. Now I think I have placed the stop around in this area, just below the recent low. This is where I had my stop at first, okay? So from here to here was the stop. So the position was already 2 times my risk, okay? And then I was like, okay, here's structure low, structure higher high, structure higher low, okay? And I was like, okay, could this be maybe a head and shoulder reversal pattern? I was not getting in, okay? I was not getting in yet. I was not getting in yet because I thought that at this point maybe this could be a head and shoulder reversal pattern, okay? But as I saw that price was slowly dumping around, and then this engulfing candle gave me the signal, okay, this is not a head and shoulders reversal pattern. Everything is fine. I'ma load it up, okay? So I was stepping in with 2 more positions, moved my stop below the structure low, just below this one, and then I just hold it, okay, and wait and see what price is doing. And then price came down, some more, and I was like, okay, maybe it will reverse now. Should I maybe close the positions with at break even, because I didn't want to give these positions I didn't want to give these positions much air to breathe. Okay, I wanted them to just go straight to the top, and I didn't want any drawdown on that one, because this is a clear, this is for me a clear level where price should bounce and keep moving. And if it doesn't do that, and if it retraces deeper, I wanted to close it. So I think the first two trades I was just closing at break even when I saw prices coming down slowly. Okay, and then I was thinking about, okay, when we can get a nice, if we can get a nice bullish, if we can get some bullish pressure again, I will buy it again. Okay, so this is what I did. I was buying it again. Price dipped against me. I was holding it, just waiting, and then finally a candle pushed through it, and I was in profit. Then I started to move my stop just below the recent low, below the structure. Price was moving, so I was in profit 280 grand on that one. And then it came down again. I was like, okay, let's see what happens. Maybe we can get in another nice push where we can scale that shit up. My long-term target was around 1865. This was the recent highest high, all time, not all time high, but the recent high from tonight. This is where my target was. But yeah, you will see what's happening here. So price was slashing below, uh, then it shooted up, new high, and then I was like, okay, let's stack it up. I think this thing will blast through the target, but it was just a fake out move, so I was getting in some more, and then I had like 1, 2, 3, 4, 5, 6, 7, I think 8 positions or 9 positions. Yeah, now I have 9 positions on gold with a potential of, I don't know, man, if this thing would have smashed the target at 1865, I'm sure this would have been another $1 million trade. But yeah, it was just fucking around at the end. I was moving my stop very tight, so I didn't want it to give back too much of my profits. I didn't want it to end out break even, so I wanted a small profit at least. And then price was just slashing, just consolidating, and finally at the end I got stopped out of this trade. But anyways, made a small profit of nearly 130 grand. So 130 grand on that position, with a potential profit of more than $1 million if this would have smashed the target. Okay. Okay, now let me show you another one. Let me show you another one on NAS 100 and gold. This was a trade from yesterday. Okay. So Nasdaq was dropping strong, like sellers were stepping in. I was a little bit too late, but anyways, I thought, okay, we have a potential target at 10,745, around 10,800, like 10,800 was the next target, and I wanted to load it up. Like my risk right now on this one was, I think, 1, 2, 3, 4, 5, 6, 7, 10. My risk was around 1%, 1.5%, not more than that. And on gold I was buying, but I think I get stopped out. I'm not sure. Oh no, this was this triangle. But anyways, you see on Nasdaq I was scaling it up because we have clear bearish structure and it keeps pushing. So whenever it retested, I was scaling in some more. On the retest, as you can see here, you can see clear the bearish structure, new low, coming back again, boom. So I was scaling in some more positions on the on the pullback and retest, like around this area. I was scaling in some more, and then and I already was moving the stop in mind. Okay, I already moved the stop in mind, and now okay, I forgot to tell you about gold. Like these trades were moving at the same time. I saw this triangle consolidation pattern, and I was like, all right, I will not wait. If it doesn't break out, I'm gonna close this trade and take the profit, which was nice, was around, I don't know, maybe $100,000. I was just closing the position when I saw that this candle gets fucked. Okay, just watch it. Candle. So we get selling pressure, and I was like, okay, let's close this thing. Like, boom. This is when I was getting out. I was like, okay, this thing wants to go to the bottom of the this triangle wedge or whatever, this channel. And so I was closing it with a small profit and just waiting what it does next. And Nasdaq was just going, just slashing, like just falling and falling. So yeah, Nasdaq was falling. Then buyers stepping into the game finally. And then you can see gold started to come out of that channel again. So I was like, okay, maybe we got the breakout now. Let's hold this thing. As you can see, gold is here. Okay, it break out of of this channel. It was breaking out, and I was like, okay, let's buy it again. Let's take the breakout trade. Mm. And yeah, Nasdaq. What happened on Nasdaq? Nasdaq. I already moved my stop above this structure lower high. Okay, I moved my stop just here. So I thought, okay, let's give it some space for potential for potential um for potential stop hunts. Okay, and that's why I placed the stop over there. And yeah, I gave back too much of my profits. Like this was a small loss at the end. As you can see, it hit my stop. And before the stop, I was scaling in some more positions because I thought, okay, if this thing turns now, then I want to be scaling big time with just small risk. Like I was risking $10,000 or something like this on like crazy lot size on Nasdaq. Okay, just before the stop loss got hit, I was thinking like, okay, let's risk another 10 grand. If this thing drops, we're gonna make huge amounts of money. Okay, so I always give the market the chance to fill my pocket with a big move. Okay, but if it doesn't respect my stops, then I'm getting out, take the loss, and it's fine for me. Okay, and next time I will be placing my entries better. So what I did after I got stopped out on this, watch the right side of the screen, guys. Check it out. So I saw, all right, now seller stepping into the game again. Just I got stopped out, but I was placing my stop where I think everybody placed their stop. So I got stopped out with everybody, and after that the market fall down again. So it just did what I was thinking, but I got stopped out. So I was thinking like, okay, I just took a small loss of like I think it was like 50,000 or something like this, 1%, okay, like around 1%. So I was like, okay, fuck it, I'm gonna get in with this tight stop, risk another 1% on my capital, and try to sniper that thing, okay. So what I did was just I was loading it up like with big lot size from scratch. Like I just blew it up with I think 5 or 6 positions with 500 lots. Okay, and the risk was 1%, like 50 grand. Okay, when I thought it came back up, boom, another entry, and then I had my stop, so I was getting my pizza and didn't watch it. So I was getting my pizza, drive to the pizzeria that I love, and then the market just falling down. And when I came back home, I was like, okay, cool. Now what we do now? It looks like it wants to go for lower lows. So let's blast that thing up. Let's just blast it up with some more position. I was like, okay, no, it's not getting anywhere. Let's just close it and be happy with the profit on NAS. So yeah, and this is what I did. I was getting out of that thing, and now you can see what happened. Like it just did what I didn't want it to see. It just came back up to hit another stop target, And I was luckily that I was getting out as soon as I saw that the buyers getting in control of the market again. I mean, can you see this? Let's do it slowly. I was checking the 5-minute chart and I see, okay, now we have this huge wick rejection, like boom, buyers getting in. And I was like, nah, I don't want to see that thing goes up again. I mean, I have my stops already in profit, but let's secure the cake. Like, fuck it, and just close it and be happy. And I was closing gold as well, because if you see the middle of the screen, uh, it was at end of the session. I like to trade New York session. I don't want to hold it overnight because I wanted to get some sleep. So yeah, what I did on gold was I just closed it with Nasdaq just to finish my day. It was just day trading. Like I wanted to close the trades at the end of the session. Okay, so yeah, this was yesterday. So I saw that gold was coming down again, okay, fucking here around, and I didn't want to hold it. Even if gold starts to pushing back up again, and overnight this thing even blast through the roof to 1,865. But yeah, I was not patient enough to hold it. But anyways, don't care about that. I was getting the pullback move. I was getting in on the pullback move this morning when I woke up. Took a small win that I already showed you. But now let me show you how to scale out. Like, look, this was a gold trade that I took on Monday. Yeah, on Monday, and I was holding it overnight because gold. Let me show you gold. Um, Let me show you what happened on gold. What we got on our time frame, so that you can see what happened. So I was getting in on gold around in this area when the price was breaking this extreme channel. Like this was a sideways channel, and this channel was price was fucking around in it, but then it finally break through it, clearly break through it, came down, got rejected, slowly starts taking off, and this was the area where I was getting in. And on the next, yeah, the stop losses were somewhere around in this area here, okay. And let's go to the smaller time frame and see where the stop losses were exactly. Okay, so I was getting in somewhere around in this area here, okay. So the stops was here around in this area. So when it break through the retest, new high, boom, and the stop was just around in this area here, okay. I didn't want it to go back down here, so this is where my stop was. And then the price was just moving up big time, okay. And this was the area where I was getting out of that trade. And now let me show you why I scaled out from that trade, okay. So this thing went up big time overnight. I was sleeping, and then I woke up to like, I don't know, it was around in this area. I think I woke up with around 600,000 profit or something like this, and I was holding it and see, okay, it keeps printing, it keeps going with the structure, nothing too crazy, it keeps pushing higher highs. But then finally, let's check the 1-minute chart, because I was checking the 1-minute chart for the exit, because after this huge push, no wait, am I right? Sorry, this was not the push. After this huge push here, after this huge push on the 1-minute, boom, we got a wick rejection, sellers getting in control, price came back, didn't make another high, so kind of a double top, okay. And then price was just slashing in that level, so I decided to get out in this area because I don't want it to this thing to come back for a bigger pullback. I wanted to bank the $1.5 million, and this is what I did. Okay, so as you can see, guys, over here, price clearly. So what I do is I always check all the time frames to always know what's going on all these time frames, check the structure and all that. So yeah, what I clearly saw, like this huge wick, like I told you before, and then price came down. I mean, this pullback is all right. I mean, this pullback after move like this is okay. Okay, this pullback was all right, but then after that, price clearly failed for new higher highs, and it looks like this area is where sellers get in control. I saw this week and this week, and it was just fucking around in this area, and I was like, okay, man, let's secure the cake. I mean, 1.5 million is great. It's a great trade. Took my account from 4.3 million to 5.8 million or something like this, and that's good. That's an awesome trade. So yeah, what I did was just I had my stop in mind somewhere around in this area because I didn't want to give back too much of my profits. We already had this great move, and I was just waiting to close this thing, okay? Because yeah, it didn't got anywhere. It was consolidating, and yeah, didn't want to risk that thing because it could easily drop some more after a huge push like this, and yeah, that's why I secured the cake, you know. This is why I secured the cake. And yeah, let's go again to this one. This was just 1.5 hours ago. Now my account is at around 6.1 million. So yeah, I already explained to you why I was getting in, because we had this support level, and then clearly bullish structure. Price was really moving, so I was stepping in. And then I was thinking like, okay, let's get in, and yeah, you all know what happened. I was skating it in and out, just reading price action and do what the price action is telling me, you know. And this is what I did. This is what I did with a hard stop. I mean, at the end, I got stopped out with a trade in profit, like 130 grand in profit, with a potential of like easy 1 million or more if it would just blast through the target. But yeah, we couldn't bank the target. But I hope this video was helpful for you to understand what I'm doing and how I'm doing it, you know, because I wanna make you guys bank this money as well. Like you should really bring the food on the table for your family. This is why we trading, and of course you want to be free, be your own boss. And if you want to be your own boss, you really need to understand how to manage your money. On the good runs, you need to give it a chance to to fill your pocket with a big move, and on the bad runs, we need to cut the losses really strict. Like, don't risk more than your maximum risk appetite, okay? And and set your stop losses at reasonable spots. Like, if the structure gets broken, I mean, we want to step into the game when the price is moving in our favor. We want to get in when it's moving, okay? We don't want to guess that it could be moving soon. No, we want to step into the game when the market is moving in our favor. And we want to set our stop at a spot where if the market breaks that point, we don't want to be in no more because the structure that we want to trade is clearly broken. Of course, sometimes you get just stop hunted, okay, and maybe you get stop hunted a lot of times, but if you see that you got stop hunted, you can give it another try. Like, give it one more chance. If you clearly see that this is a stop hunt, if you can clearly see that you get just wicked out, like if you see the price came down fast and snapped up again, then you know, okay, this was a stop hunt. Maybe the buyers just got fucked, okay, and maybe I should step into the game with another trade because it was just a stop run, and I am right with my analysis. I just got stop hunted, okay? So then you can give it another try, okay? And if you got a good run, I mean, it is easy to get a good run if you keep doing what you do, sticking to your system. I mean, you don't need to have complicated rules when it comes to entries and exit. You just need to read the structure on all these different time frames. You start from the bigger time frame, from the 4-hour chart. You start from the 4-hour chart. Let's see. Let's see on gold. Like, this breakout trade was perfect, man. This breakout trade was perfect because on gold is a fucking strong trending market, so you can get good breakout trades on gold, you know. And yeah, I had marked up these zones where price was bouncing, and I was like, okay, if it slashed through this level, I want to buy it. And what happened? I bought it, and I got a big ass move that would brings me like 10 times my risk or something like this, okay? And yeah, it is possible to catch these moves if you just keep trying, and trying. Cut your losses quick and let these good trades run, manage them along the way and let them run, let them cook. They will they will flip your account like crazy if you're able to take the risks, okay? If you're able to scale in on that one. I mean, there is no reason for you to be scared to load up a winning trade. Don't be scared about that. You have to load it up, okay? You have to load it up. And yeah, let's talk about how to load it up, okay? So if you got a really great trade running and you still got potential to your overall profit target that you got an eye on. I mean, you should always have a big profit target in mind, like a reasonable profit target. That could be an even number, like on gold, it could be the 1,850 price or the 1,900 price, okay? This could be a target for you. If you're trading in a market where it's the all-time highs and you don't have a structure high that you can aim for, then you can aim for even numbers, or you can just watch price action and just trade the structure and read the structure and read the information that the price gives you. Like, you can see the structure, you can see the size of the candles, you can see the candlestick patterns on all different time frames, and they can give you clues about what to do, okay? You can have entry patterns, and these entry patterns that you use to get an entry, like if you want to go long and you see a double bottom formed with a nice break of structure to the upside, then a pullback move to the break of structure, and it keeps going and you see the bullish structure starts forming. I mean, if you get in on that one, then you could use this signal to the opposite side. Like, if you get a double top with a break of structure, then you can use this signal as an exit signal, okay? So all these patterns, candlestick formations and all that stuff that you are looking at, okay, all this stuff can easily be used as entry confirmations as well as exit confirmations. And what I like to do is I like to start on a 4-hour time frame with my analysis, mark up all these major resistance and support levels, and then I like to trade breakouts or break and retests. This is all I do, literally. It is very, very simple concepts and nothing to get crazy about. All you need to understand is how market structure work. And market structure works most of the time on all these different time frames, you know? And if you take the 4-hour chart analysis to your advantage to understand in what kind of environment you are, okay? That means you read from the higher time frame in what direction the market could probably bounce, or you can just mark up these horizontal levels like support and resistance level, or supply and demand, or horizontal level, however you want to call it. It's all the same. Like, these levels where price bouncing at the most. So as soon as the market gets to one of these significant major levels, you want to go to the lower time frames and you want to see what is happening on the price action on the lower time frames. Okay, I mean, if the price is breaking out, you want to see the breakout. Nice. Okay, then it will, most of the time it will come back to the zone for the pullback retest. Boom, and then it has to get up again, maybe for a new higher high. And then you see this structure forming on the lower time frame. And this, if you see after a bullish breakout like this one here, I mean, gold is a perfect example. And I like to trade gold, so I'm going to show you the gold example. I think I've showed you already, but whatever, let's talk about it again. I mean, price clearly broke through that level. Boom, got rejected, came back, was consolidating. Boom, and then you see it starts this bullish structure. So everything tells you that this thing wants to blast through the roof. So just hop in on that. Put your stop at a reasonable stop, like this over here would be a reasonable stop, or here. Like, if the structure gets broken, you don't want to hold that thing, okay? And if you get stuck on it, okay, give it another try. It's okay. It's okay to be, you don't need to be right all the time. All you need to do is sometimes be right and then load it up, okay? This is all I do. I'm not the best when it comes to picking entries, okay, or exits. I'm just good with scaling it up. Like, if I feel that this thing is going in my favor, then I'm ready to blast this thing up, because I want to make this big money on this single trades. I mean, even if I have a losing streak of 10 trades, I know that one trade is enough to get rid of all of these, because I know how to manage my trades. And I can read the structure on all these time frames, and this structure is telling me when it's a good time to get in and when it's a good time to get out. Okay, so like I told you, I see, okay, sellers getting control of the market, so it's time to leave this trade. And I was banking profit, and as you can see, the price after this triangle formation, or how you want to call it, like, price was doing something like this. We had this little triangle over here. After it broke out of this triangle, it came back to that level, like nearly the middle point of the triangle, and then it just keep going. I could have held this through this, but if you have a great trade and you're already at a reasonable exit, like it was at the 1840 price and got rejected. So this is, for me, this is a significant level. The 1840 is a significant level because it's an even number, and the market makers, they trade between these even numbers. Okay, most of the time they they just use these even numbers for their trading decisions as well. So yeah, that's why I was getting out, and then I started to get in again, but the session was ended and I didn't want to go to sleep and hold this thing. But anyways, this could have been another big winner. And yeah, on gold, like I said, it's a strong trending market, guys. You can really fucking load that shit up. Like, if you got a good run, gold is trending crazy. I mean, in both directions. It can be good for you and it can be bad for you, okay? Or it can be just good if you're always on the right side. I don't think that you will be always on the right side, but it is alright to be right 30% of the time. That's fine. That's fine. If you can make 5 to 10 times your risk on a good one, then you will make, I don't really need to say this, man. Just do your math. So yeah, um, so what we gonna do? Let me tell you some more. So if you got a really great trade running and you still got potential to your overall profit target that you got an eye on, then you can hold your trade through a pullback and scale it up as soon as you get another signal that it goes in your direction again. Okay? And as soon as you got some profit on the clock, you can start playing with it. You should always have your risk appetite in mind, okay? And know when to exit if the market goes against you, like if the structure gets broken on the smaller time frames. And even if you play with it, of course, you need to understand it can turn on you and delete your profits. So there is no magic formula how to do it, okay? And when to get in and out. The market always do what it does, and we just have to react to it, okay? And at the end, you guys are the ones who are pulling the trigger. I can't do it for you. So you gotta find a way to control the losses and ride the winning trades to their full potential. I mean, as long as the markets keep printing your candles, you can load it up. There is no right or wrong way to do it. Just make sure that you exit all trades as soon as the market tell you to do that. I mean, when you get a clear break of structure, that could be an exit signal, okay? Or if you get a candlestick confirmation, like a candlestick pattern that shows you that the seller's getting in control of the market, then you can secure your profits, okay? There are two other ways how to load the position size up. The first thing you can do is you can scale up the breakout after a consolidation or pullback move. Like if you go to the smaller time frame and you see what's going on, okay, go to the smaller time frame, you see what's going on. I mean, I took this trade, I was in that trade. I mean, if you see this pullback, cool. If it slashed through that pullback, breakout, you can scale up your position size. Boom. Get another entry. Place your stop below that structure. Boom. Then you get another retrace. Then it got it got smashed. Like you get another breakout after a small pullback move. Another breakout. You can get in. Place your stop below the structure here. Boom. Then you get another pullback and price keeps smashing it, break out, boom, you get in. You get in here again. Move your stops below the structure. Then you get another pullback move. Boom, you get in again. Here, you get in again. Stop is below here. Price comes back. Failed to, no break of structure yet. Boom, you get in again. Stop should be below here or below here, okay? Then price came up, price went down, price goes up, boom, you scale in again. Stop should be below over here. Then market is moving, boom, you get in again. Stop is below this structure, okay? Boom, you got stopped out. But on the way, you scaled in 1 time, 2 times, 3 times, 4 times, 5 times, 6 times, 7 times. So you scaled in 7 times on the way up and you already had like huge profit from this position over here. And you just loaded it up. Boom, 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 boom. And then you get out. Structure's broken. Boom, get out. Take the profit and you're out, man. And then you can finish the day. Go shopping with your wifey or with your kids. Have some fun. Jump in the pool. Make some good food. Go out to eat something good. Or have fun riding the quads. Like, do what the fuck you want to do. Okay? Let's get it. So every time you scale in, you should move your stop to avoid bigger losses than your maximum risk appetite, okay? If you always wait for the best price to start your trade with, you can easily be 3 to 5 times bigger on your good runs than you are on your bad runs. and all you need to do is load that shit up as soon as you know you are on the right side of the wave. Okay, cut the losses quick, try to eat the entire moves. Use your knowledge about candlesticks and structure to make sure you don't give back too much of your profits, and that's it. That's it. Very simple concept, but very powerful if you use it the right way. Now let's talk about scaling out. I want to go over it again, okay? So that because this is really where the money is being made. So I need to talk about that over and over and over again with you guys, just to make sure that you can get on the level where you want to be, okay? So why it is so important to focus on not losing money? I mean, small losses make you, and big losses break you. There is no way that you're going to have 100% accuracy, okay? So you need to know that you always have to cut your losses at some point. The smaller the loss, the better it is for your account and mental health, of course. It is important that you feel comfortable with your losses because you cannot avoid them, okay? For example, you split your position size in 3 pieces. Your first position got a risk of 1%, okay? If the market moves against you, 1% is all you can lose. But if the market moves in your favor, you scale it up and use another 1% of risk. That means you move your stop in mind, or you use a hard stop, okay? You can use your stop in mind when you close manually, or you can use a hard stop as well, okay? And I don't like hard stops because the broker hunts them, and many times I use the stop just in mind. I use a hard stop when I'm not 100% focused on the charts, like when I'm talking to my students or when I'm doing other stuff. Okay, that means you move your stop and add to your position size so that you still 1% risk, but your position is twice as big. And then you can do this again on the next time you scale in. Then you have a 3 times bigger position or more with just 1% risk. And if the market hits your target, you are going to smash it big time. And maybe you skate it up like 6 times, 7 times, 8 times, 10 times. You don't know. I mean, if the market gives you the chance to do it, then do it. Get that cake. Get the cake. Scale in, man. And if you want to play it safe, of course you can calculate your position size so that you break even in worst case, or that you make a little bit of money in worst case. That means you got nothing to lose but a lot to win on a good run, okay? And the way you split your risk is up to you. At the end of the day, you are the one who's pulling the trigger. Practice hard on demo accounts and set up your personal trading plan before you start to trade with real money. I mean, what is a trading plan? We're going to talk about that later, but a trading plan is very simple. It has to be so simple that you can even tell your mother how it works, okay? I mean, if you just mark up uh, significant levels on the 4-hour chart and you just wait for breakouts to write the breakout on the smaller time frame, and that's it. You scale it up when it moves your favor. If it doesn't move in your favor, if you don't get the move that you're expecting, then you're out. I mean, it's easy. You can focus on breakout trades, or you can focus on breakout and retest trades, like you want to get in the pullback move, or whatever it is, like whatever you feel comfortable with. You have to practice it on the demo, make some back tests, and just see what is possible. Okay, and as soon as you start with real money, start small. Try to flip a small account, okay? Because if you can't flip a small account, you won't be able to flip a big one, okay? So it's better to start small. And this way, your emotions won't ruin your trading decision. And you can stick to your plan and get a feeling for real money trading. I mean, trading real money is a way different story because there are more emotions involved. And as soon as you become a master of your craft, you can even flip an account with just one good trade. I mean, learn how to ride the waves, okay? Cut losses quick and let the winners run. And I know it is not that easy to do because it is against human nature. We all want to bank profits quick, but at the same time, we don't want to lose money. So most of the time, traders struggling with holding losing trades for too long, but cut the winning trades too early. And we as traders have to do what average people are not able to do, okay? Cut losses early, let good trades cook, stay on your grind, and don't let emotions ruin your trading decisions, okay? So let's talk about 3 ways to scale out of a winning trade. The first one is the target got hit at a major support and resistance level. So you can bank part of your profits or your whole profits at a significant level, or you can bank all your profits, or you can just bank a part of your profits at a significant level and try to let some of your positions run for bigger targets, okay? This is number one. Number two is you can use a trailing stop rule to try to let your trades run as far as they can. So like I showed you the example on gold, how I would do it, okay? How you can do it. Um, this is a trailing stop rule. Like if you get a breakout, you scale in and you move the stop below the structure low. Like let's go to the chart. Like it breaks out and you move your stop below that. That's your rule. Like if you get a breakout, you scale in, you move your stop below the low. Boom. Get another pullback move and it breaks out, you scale in and you place your stop below the pullback. And all the time you do just the same thing. Very easy. Number two, you can use the trailing stop rule. Like I told you before, you could say I always put my stop 5 or 10 pips below the recent 1 hour candle or 4 hour. I mean, when you want to trade a trade on a bigger time frame, you can just use the 1 hour candles or 4 hour candles or 30-minute candles or whatever time frame you want to trade, and just place the stops below the candles. What do we have here on the 1 hour chart? I mean, if you write this thing on the 1 hour chart and you was getting in here somewhere around here, it moved, boom, and you have your stop somewhere below here, like 5 or 10 pips below the candle, okay? And it keeps moving, get a pullback move, then you place your stop below here, and you just move your stop with the 1 hour candle, and you can use a trailing stop rule like this as well, like boom, 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 and you don't get stopped out. If it's moving in your favor, you don't get stopped out. Like then here, boom, you got stopped out, but you've eat the entire move, you know, you've eat the entire move before you got stopped out. I mean, you can do it like that as well. You decide how you want to do it, okay? You have to try it, man. At the end of the day, it is your fucking trading account. You need to make this decision on your own. I'm just here to give you the ideas and to tell you what works, okay? And it is up to you to have the consistency to stick to it and just do it. Go for it, okay? This depends on your style. You need to experiment this and find your way. Number three, how to scale out of a winning trade. I mean, you can close your positions based on a candlestick formation as well. I've told you this, I will tell you again and again. Like as soon as you can see that the opposite side takes the control of the market, you want to get out and bank the profits. You can see it clearly when the structure gets broken, okay? And the same patterns you use for your entries can be your exit confirmations on the opposite side. If you get a nice double bottom with a clear break of structure plus a strong engulfing candle to enter your long position, then you can use a double top with a clear break of structure plus engulfing candle as an exit signal on the other side as well. Okay? And yeah, then some of my traders was asking me what candlestick patterns do you mainly look for exit confirmations? Well, I look for engulfing candles and dojis, the ones with these huge wicks, okay? As soon as I see a huge wick, I know there is a lot of pressure around that level, which could be great information about who is going to be in control of the market soon, okay? When the market prints a huge wick to the downside, it means that buyers give a lot of pressure to the market. Many buyers stepping into the game around that area where the wick is formed. That means they control the market. And you see these wicks many times around areas where retail traders place their stops, for example. or when the market gets ready for reversal, okay, I always check the size of the candles as well, which means I can see the momentum of the move. And when it gets slower, the candle's getting smaller and the market shows signs of a turn. Then it is maybe time to secure profits. That means you should close maybe partition profits, or you should move your stop and secure your profits. I mean, this is up to you, okay? You can put your stop behind the low or high of the recent candle, or you can put your stop below the recent structure low or high, or you should close the trade as soon as you see a break of structure, okay? When the opposite side takes control of the market, we don't want to hold our trades for a long time, okay? We don't want to hold our trades for a long time. We just want to bank on these single moves within a trend and get out when it's over.